Imagine a company so powerful it fooled banks, governments, auditors, and even the European financial system itself. A company hailed as Germany's answer to Silicon Valley, shining proof that Europe could build its own tech giants. That company was Wirecard at its peak. It was worth over $24 billion. Its CEO was a billionaire. Its stock was part of the X30, Germany's most prestigious index. And then, in June 2020, it all collapsed. $2 billion gone. The CEO arrested, the coup missing possibly. Hiding under Russian protection, and investors left asking the same haunting question. How did no one see this coming? Wirecard was born in 1999, during the dot-com boom. Its mission seemed simple: process online payments at a time when e-commerce was new and risky. Wirecard promised to make transactions secure and easy. While many tech startups died in the early 2000s, Wirecard survived. It grew by acquiring smaller companies and expanding. Into emerging markets, its services became essential for retailers, airlines, and even governments. By the mid-2010s, Wirecard wasn't just a business, it was a national symbol. Germany was proud. Newspapers called it the European PayPal. Politicians celebrated it as proof that Europe could compete with American tech dominance. In 2018, Wirecard replaced Commerzbank on the DAX index, a huge achievement for a fintech company. Stock prices soared. Investors believed they were witnessing the birth of a European tech empire. But behind the success story, there were cracks. Journalists, especially from the Financial Times, noticed inconsistencies. Wirecard claimed huge profits from operations in Asia, yet when reporters visited supposed offices in the Philippines, Singapore, and Dubai, they found empty buildings or companies that barely existed. Financial statements were complex, opaque, and filled with third-party partners no one could verify. Instead of addressing concerns, Wirecard went on the attack. Critics were threatened with lawsuits. Short sellers, people betting against the stock, were accused of conspiracy. German regulators sided with Wirecard, even banning short selling and investigating the journalists. Instead of the company, Wirecard seemed untouchable. And when a company looks too perfect to question, people stop asking questions. In June 2020, the truth hit like an earthquake. Wirecard admitted that 1.9 billion euros, around $2 billion, was missing. Not stolen, not lost. It never existed. Bank accounts that supposedly held the money didn't exist. Auditors from Ernst & Young revealed they had been shown fake documents for years. The CEO, Markus Braun, resigned and was arrested for fraud. The coup, Jan Marsalek, vanished. He boarded a private jet and disappeared, rumored to be hiding in Russia. Under intelligence protection, Wirecard filed for insolvency. Its stock value went from billions to almost zero in days. Investors lost everything. Asterisk, the Wirecard scandal wasn't just a corporate failure. It exposed how systems designed to protect U.S. banks. Regulators, auditors can be blinded by greed, pride. In politics, it showed how major auditing firms can miss or ignore obvious fraud. Governments can protect a national success story even when the evidence is screaming, and how investors, desperate for the next big win, can choose belief over facts. Wirecard wasn't just selling payment services, it was selling confidence. It was selling the idea that Europe could have its own tech unicorns, and everyone from politicians to banks wanted that dream to be real. But dreams built on lies don't last. Asterisk, asterisk. Wirecard's rise and fall is more than a story about money. It's about how entire systems can fail, and nobody wants to see the truth. It's a warning to every investor, every regulator, in every country. If something looks too perfect, it probably is.